So in trading, it is easy to remember the wins and forget the losses. It's also easy to remember the things you did well and forget the mistakes you made. And that's why I'm doing this video, because it's a journal where whatever the wins, the losses, the mistakes, I document it so that I can get better. Welcome to PhD FX, and here I show you the things I've been doing and the things I plan to work on, and some of the wins I've been having and the strategy I've been trading for quite a while now. I think this is my third year, or no, like my fourth year. I've had a lot of variances of the strategy, but I'm here. And so this video is just a recap of the trades I took in the month of February 2026, and that's just how I document the journey. So let's go straight to the data I have. As I love to always say, that as a Forex trader, you're a data analyst. It means you're more of your documenting, and the data you have would give you the confidence to put in that trade where you're not guessing, you're actually trading because of the things you've seen before, and hopefully the results you plan to achieve in the coming future. So let's go to the screen. So if you see, this is the data I have in January 2026. It was a rough month, and if you've not seen that video, I think it's once you're done with this, you can go watch the video. But this is February, and I took a loss on the 2nd, another win on the 6th, a loss on the 10th, another win on the 20th, and one win on the 25th. Now on the 6th, I had this second strategy I've been testing, and that's why I put it in blue so that I can always go back to it and see the viability. The funny thing is, in this video I'm shooting currently, I'm currently in one trade and I'm applying also the second strategy. Hopefully it goes my way, but I have 2 trades running. That's the whole point. So without much ado, let's go straight into the chart and see the trades. Now I plan to do a video on my strategy soon, just to show you, and just in case you want us to implement it together. But usually I have zones I mark just before the trading day, or the trading time, sorry. So I really wanted to buy. I knew that the market, if I wanted the market to come down this way, then tap into this zone and probably go up. But again, we don't control the market, so you trade what you see and not what you want to see. And so the market got into another zone I had marked up here, and you can see the market got in, tapped in, and again, all my trading rules were met. The New York high was taken out, 50% of the zone was taken out, so I just put my entry just beneath the last up candle for a sell, and that was it. So that was a losing trade on the 2nd. On the 6th, similar thing happened. Again, this is the New York, for me, liquidity time. Let's call it that, for fear of sounding like the ICT guys. So again, market came into the zone. It hadn't gotten to 50%. So what I do is that once we're in the zone, I will not just take my usual entry just to take the end or the lower part of an upward candle. No, I look out for fair value gaps. So that's how I entered here with this fair value gap, and I got an entry. But the second strategy came just over the weekend, which is something I had to consider for this strategy, where the zone is still holding up, but if you get another entry, shoot. So I got another entry, the same criteria, and I had 2 trades running. So the same, and both of them have the same target. So one of the things with trading psychology, and why I said we are data analysts, is if you notice the market came back to my entry at this point, many traders will have given up. I mean, this is way too much. But because I'm just working with data, and I'm either win or either it goes to my favor or it doesn't. Either it's a win or a loss. And so I don't take partials, I don't do any of that. And eventually it came to my take profit. In short, the take profit was in my zone to take a buy, and I did take a buy, and I got stopped out, which is fine. So now I have 2 losses and 1 win. So let's go again. I think the next trade was on the 20th. So I had no trades on all of these days, no trade at all. So on the 20th, again, my strategy, it tapped into the zone during the London session, which I don't trade because of my time. That's when we're supposed to be asleep. So it tapped in, but it came back into that zone again, formed a high, went down, which is good. At least this is what they call the trick. So immediately it came back, took out that high. I put it in for a 1 to 3. Again, my 50% rule is met here, 1 to 3, and boom. Yeah, that was another win. So now we have 2 losses, 2 wins. So we just need one more risk to reward, or 1%. And so on the 25th, again, I was expecting this to happen, so I'll take a buy, but it did not happen. This was in the pre-New York time, no, London time. And so the market came in here, sweet, came in, gave me my pre-New York high for liquidity, tapped in, gave me my entry 1-to-1, boom, and that's it. And that was it for the month of February. Again, I hit my 5 risks to reward. So I love to hit a total of 5R or 5%, because if I trade 2% per account, that's like 10%. And if you can do 10% consistently, you are better than most of the traders out there. So that's how I got all I got in the month of February. As I usually say, I hope to come back to my usual live streams. The only problem I have is the days where I don't have a trade, what then will happen. But just in case you want me to go back to that, I think I'll consider and get back to live streaming soon.